Now, most of you already know that in the Q4 of 2022, US GDP, which was announced early this year, came out at 2.9%, which was above what analysts expected. That is, of course, the 2.6% seen on the screen. Now, this, though, of course, it came out better than what analysts expected, or higher than what analysts expected. It came below, or it came lower than the 3.2% which they announced in Q3 of 2022. Now, this, ladies and gents, means that should we see the US Q1 GDP declining from the 2.9%, ladies and gents, it will be official that the US economy is on a recession. As you know that, of course, two quarterly declines in terms of the GDP result in a recession. So many of the analysts are expecting, or are predicting, that we are going to see the US going into a recession, which obviously I personally believe that it will be the case. After the Q1, of course, GDP figures, we are going to definitely see, of course, a decline, because, ladies and gents, apparently there are companies who have already made their forecast or prediction when it comes to, of course, the earnings per share, or how they see their profitability in the Q1 of 2023. And I must say that out of the 106 companies which, of course, gave their guidance when it comes to the earnings per share, 78 of those companies projected a negative earnings per share when it comes to the Q1, or a decline in terms of the earnings per share or profitability, which is something that obviously that won't be good to the economy. That is, or this is the first sign that shows us that obviously we might see the US going into a recession after the Q1 GDP figures are released. Otherwise, before we forget, that also you already know that this video is just an entertainment video and not a professional financial advice video. Now, I really appreciate if you can just hit the like button if you do enjoy the content that I'm giving you on what's ahead in the US economy, which obviously it does affect companies in the stock market, because, like I said, 78 out of the 106 companies that have issued guidance on their earnings per share indicated that they see a decline in their earnings per share, which is quite a problem, or which is something that shows you that obviously we might be heading into a recession, because companies are not profitable as they were, which is something that is a concern, and something that obviously we know that it leads into a recession, because this, or the last time we saw this, it was back in Q3 of 2019, or the last time we saw a huge number of companies projecting a negative earnings per share, or a decline in the earnings per share. It was back in Q3 of 2019. So if you do enjoy this content, I would really appreciate if you can just hit that like button and subscribe. That's if you have not subscribed to the channel already. So yes, this is what we saw. I read an article yesterday indicating that out of the 106 companies that have issued their guidance, or their prediction, or their projection on what they are anticipating on their Q1 earnings, 78 of the companies, or 78 out of 106 companies that issued their guidance or projections or prediction of their earnings per share, 78 of them issued a negative EPS, or a decline in the earnings per share, which is something that obviously, like I said, it is a concern, especially to the investors, or those that are investing in the stock market, because these are the companies that are in the S&P 500, and these 108 companies we saw are part of the S&P 500, which is the top 500 companies in the US. So to get to see them, of course, indicating or saying that out of the 106 companies, 78 of those issued a negative guidance, it is a concern, and it must be something that, of course, as a retail investor, you take a note of that, because if we see majority of the companies in the S&P 500, of course, issuing negative guidance, or this already shows us that maybe majority of the companies in the S&P 500 might not perform good when you look in the earnings per share, when you look in the profitability in the upcoming Q1 earnings, which that we already know what does into stocks. It makes stocks not to do very well in terms of in the share price. It makes stocks to plummet because earnings miss, you already know. I mean, we've seen into stocks like Meta, stocks like Netflix, stocks like, of course, Intel, that after they missed, of course, ladies and gents, their earnings, we saw the share price dropping sharply. So this is something that we could be seeing maybe in a couple of weeks when companies start, of course, announcing their Q1 earnings, which, ladies and gents, yeah, we all just need to brace ourselves, because if this comes out to be, of course, what we see in most of the companies in the S&P 500, then, of course, there is no doubt that we are heading into a recession. In fact, when I read this article, I think this was a sign to say that obviously we are really heading into a recession, and there's no way the US can dodge this bullet which is coming, and that is a bullet of recession. So yeah, I was quite sad, because I mean, obviously we don't want to see this, but of course, due to the interest rate hikes that we've been seeing, it is resulting in companies not doing really well. It is resulting into some of the industries really feeling the pain of these high interest rate hikes that we've been seeing from the Federal Reserve imposing, or of course bringing into the table, trying to curb inflation. I mean, the banking sector, you will know that it's one of the sectors that have been heavily hit, or that is really suffering from these interest rate hikes. We've been seeing, of course, the saga, or the SBV saga, which of course is the one that obviously started with this whole thing of us saying that, of course, the banking sector, it is really feeling the pain of high interest rate hikes, and now it has, of course, rubbed off into other banks. We are seeing, of course, the banking sector, of course, not doing as good, or suffering from these interest rate hikes. So yes, out of these 106, though there are 76 companies that issued a negative EPS, or a decline in an earnings per share, there are 28 companies that, of course, made a guidance, or gave a guidance of course, a positive EPS, or positive earnings per share, or profitability, which is something that is good. So regardless of what these other 78 companies are saying about their upcoming Q1 earnings, there are still other few companies, and 28 of the 106 companies that are saying that, you know what, in the Q1 we expect to see a positive earnings, or an increase in our earnings per share, which is something that obviously to those companies it is quite amazing. Now, one of the things, like as I was discussing about banking stocks, unfortunately, as per this article, most of them, they don't issue guidance, or they don't issue like projection on what they expect in their earnings before they actually like announce the earnings, which is why it is difficult, or they could not see, or we don't have or know what we can expect from the banking sectors, or from the companies or stocks in the banking sector. So in the information technology and the industrial sector, we saw, of course, 27 of the information technology company, or tech companies, with industrial companies of 16 saying or projecting that in the Q1 earnings they see a negative EPS, or they see a decline in their earnings per share, which, by the way, this is 43 out of the 78 in total of the companies that we saw them highlighting that in the Q1 earnings they foresee themselves seeing a decline in their, of course, earnings, or Q1 of 2023 earnings. So this already, if half of those companies, or over half of those companies, are, of course, tech and industrial, of course, the sectors, this definitely means that, yeah, it looks like things are really bad, and it is going to result in, obviously, the US not managing to, of course, report a GDP of over 2.9%. Chances are very high that we are going to see, of course, the US, of course, reporting a lower GDP figure than the one they report in the Q4 of 2022, and that is the GDP figure of 2.9%, which was lower than the 3.2% that reported in the Q3 of 2022. So yes, I know that this, though it might scare you, I mean, if we, even if we are to see companies or most companies reporting negative or poor earnings, it offers opportunities to those that want to increase their holdings into some of the good quality stocks, because if we get to see, of course, companies reporting worse in earnings or bad earnings, it will result in the share price to drop, and that offers a good discount into those companies, because we know that it is not like it's the end of the road onto those companies, but it is because of the kind of the economy those companies are currently operating in, because the current economy in the US, I mean, we cannot dispute that inflation is still very high, and the Federal Reserve still, of course, continues increasing interest rates, trying to curb inflation. But one of the good figures when you talk about inflation figures for March are due this coming Wednesday, and I think analysts are seeing on the screen are expecting to see an inflation coming at 5.2%. So if we get inflation at 5.2% or lower, then it is a good sign that we are seeing a deflation into the US economy, which is something that is good, because that will result or make the Federal Reserve not to increase the interest rates by much. But if we get to see inflation not coming at 5.2 or at least below 5.2%, and it comes higher than that figure, then, ladies and gents, that is one of the things that might trigger the Federal Reserve to once again in the next meeting to probably increase interest rates. Otherwise, with all that, guys, I just thought I should just give you this quick update as to what is it that we can expect in the US in the coming, of course, Q1, as most of the companies will be announcing their Q1 earnings very soon. And there are some of the companies that obviously we cover on this channel that will be announcing their Q1 earnings. And after I read that article yesterday, I began to think about some of the companies that I'm eyeing, if whether they will produce a positive or a negative EPS, or a decline or increase in their EPS or profitability on the upcoming Q1 earnings. But yeah, I'm hoping for the best, but I won't be aggressive by much until at least we see the GDP figures, until at least we see some of the Q1 earnings from the companies that I'm eyeing. And if I get to see a good, of course, a positive earning from some of the companies, I'm going to, of course, continue increasing my holdings or buy those companies if I don't have them in my portfolio already. Whereas if I see, of course, a negative earnings into some of the companies I own, or some of the companies I plan to acquire or add into my portfolio, then, ladies and gents, I'm going to consider taking that opportunity, or the huge drops that we see after the earnings, as an opportunity for me to load the boat, increase my holdings, or add a couple of stocks rather into my portfolio, because I know that they'll be trading at a discount, and one way or the other, these are the companies, or these are the stocks that I believe would recover when the economy stabilizes. Otherwise, that's all from me, and it is important, like I always say, before you load the boat, add any company in your stock market portfolio. You do your own due diligence, because it's not just about, of course, the checking the companies, what's happening in your company, but it is also important that you check what is happening in the economy as a whole, because things like interest rates result in companies not, of course, performing the way they should, which is exactly what we are seeing right now, or what we are going to see, of course, in the Q1 earnings. And already what we are seeing, companies already issuing a negative EPS due to the fact that they know that the economy, or the US economy, is not in a good shape, which is why they are projecting poor earnings. So it is important that you don't just check maybe the news of the companies you want to buy, but you also check how the economy is recovering from high inflation, which obviously we know that, yeah, if it is recovering quite good, then stocks will, of course, return, or will also recover in terms of the share price. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.